Elon Musk's analyses and forecasts on electric vehicles often hit the mark. Given his track record, his views are highly regarded. When he predicts an imminent financial crisis for a specific manufacturer, the market listens. Musk's predictions are materializing once again, underscoring the pertinence and almost prophetic nature of his observations. In today's video, we'll delve into this very topic. Join us as we explore the astonishing downturn in the electric vehicle industry, validating the significance of Musk's predictions and insights. Let's dive deeper into this situation together. Challenges in the electric market. At the Tesla shareholders meeting in 2023, Elon Musk addressed the rapid growth and fierce competition in the global electric sector. He pointed out that amid numerous competitors, only Tesla and BYD are turning a net profit. Other, newer manufacturers are facing significant hurdles in their fight for survival. Musk also highlighted the performance of some Chinese electric vehicle makers. He first mentioned BYD, a strong competitor with established profits. He also discussed NIO, XPeng, and Polestar, which have carved out market shares but struggle to achieve profitability. The challenges faced by these Chinese manufacturers mirror the current state of the industry. Recent data indicate that companies like BYD, NIO, XPeng, and Polestar are battling to be profitable and maintain stable finances. Their operating profit margins lag significantly behind Tesla's, by 14 to 74%. This emphasizes the financial performance gap and their struggle to replicate Tesla's success. In terms of cash flow, the gap between these Chinese companies and Tesla is striking, ranging from $16 to $20 billion. Moreover, there's been a significant decline in the number of active companies in the sector. In 2018, there were over 487 new electric car companies in China. By 2023, only about 40 remained operational. This indicates that over 400 companies have ceased operations, showing that more than 90% of the new manufacturers have failed. The competition. During the 2023 Tesla shareholders meeting, Elon Musk spoke about the swift growth and intense competition in the global electric sector. He highlighted that among many competitors, only Tesla and BYD are profitable. Other newer manufacturers face substantial survival challenges. Musk also shed light on the performance of certain Chinese electric vehicle manufacturers. He first mentioned BYD, a formidable competitor with solid profits. He then talked about NIO, XPeng, and Polestar, which have gained market shares but struggle with profitability. The hurdles these Chinese manufacturers face reflect the industry's current reality. Recent figures show companies like BYD, NIO, XPeng, and Polestar fighting for profitability and financial stability. Their operational profit margins fall considerably short of Tesla's, highlighting a financial performance gap and their struggle to replicate Tesla's success. In cash flow terms, the disparity between these Chinese firms and Tesla is pronounced, with differences ranging from $16 to $20 billion. Additionally, there's been a sharp decrease in the number of active companies within the sector. In 2018, China had over 487 new electric vehicle companies. By 2023, only about 40 remain in operation, indicating that over 400 companies have vanished, showing that more than 90% of the new manufacturers have gone bankrupt. Major challenges ahead. In the realm of vehicle production, many companies face significant funding issues. Throughout this year, several new automobile manufacturers, categorized as second, third, and fourth tier, such as Iwais, Leap Motor, Weltmeister, Skywell, Hosen, Cytec, and Future Mobility Products, have encountered significant operational challenges. A lack of capital emerges as a primary issue for these companies. After setting up production facilities and acquiring the necessary manufacturing qualifications, many find themselves short of the financial resources needed for new product development. As a result, they might struggle to maintain excellence in their models and market competitiveness. This could lead to decreased sales and increased operational costs. As seen with Iwais, Weltmeister, and Cytec, companies like Iwais and Weltmeister experienced sales declines due to inferior product quality and high competition, resulting in financial losses. SciTech, despite securing $500 million in series of funding in 2021, faces similar challenges. While this infusion of funds may provide some relief, it might still prove insufficient in the highly competitive and investment-intensive electric vehicle industry. The lack of adequate development funds can limit these companies' ability to enhance their products and remain competitive, as market demand continuously evolves. This places them at a disadvantage compared to financially stronger competitors like Tesla, which has resources for research, development, and innovation. There are also cases where companies attempted to transition from manufacturing low-end electric vehicles to high-end models, requiring significant capital investment. However, in some scenarios, sales post-transition failed to meet expectations, leading to further losses. Leap Motor and Skywell Auto are examples of companies that faced issues in this regard. Furthermore, some companies have struggled with vehicle delivery. Rosan Auto, for instance, managed to deliver only 900 vehicles to customers, in a market where the monthly delivery volume of new electric vehicles is around 10,000 units. Such low delivery numbers can undermine consumer confidence in a company's ability to meet demand. Additionally, companies like Future Mobility have faced difficulties in generating sales, even after launching new vehicle models. Sales performance has been extremely poor, with one model selling only 131 units in a year and a half, while another model has faced delivery delays since its launch in June 2022. Challenges in the electric vehicle industry. The sector's largest companies, NIO and XPeng, are facing challenges. For example, NIO experienced a significant sales drop in April 2023, selling only 6,658 units, marking a 35.8% decrease from the previous month. This decline can be attributed to the influx of new high-end electric vehicle brands and fierce competition. The increase in electric vehicle brands and intensified competition have adversely affected companies like NIO and XPeng. Additionally, NIO's strategy of launching battery swap stations has led to challenges related to rising expenses and cash flow. In the fourth quarter of 2022, NIO's total expenses reached 68,620 million yuan, resulting in a debt ratio of 71.28%. Meanwhile, its cash and equivalents were just 19,890 million yuan. These figures have created difficulties for NIO in managing its debts. XPeng, on the other hand, faces challenges in sales performance and stiff competition. In April, XPeng's sales totaled 7,079 units, with its flagship model, the P7, facing strong competition from Tesla's Model 3.